Well, stocks falling for the fifth straight day amid growing concerns about weak global economy. Allianz chief economic advisor Mohamed Al-Arian told our own Liz Klayman on Countdown to the Closing Bell, we can't count on the Federal Reserve to intervene.
We've been addicted to the Fed. And normally the Fed comes in quite quickly when there's this type of volatility. But it's not this time around, and for good reason. They really want to get out of this business. So we have to understand this, that we are coming to the end of the road where we could rely on central banks to bail out and to repress financial volatility.
We got to get some reaction. We're going to get it right from Gary Kaltbaum, president of Kaltbaum Capital Management, Fox News contributor. He knows what's going on, and he's well aware of the fact that the Dow's down over 10% this year, led by those financials. Gary, what do you make of it?
Well, first off, I think he's right, but I think he's right for another reason. I just think markets don't care anymore what central banks do. Just remember, for years, anytime a central banker would say something or do something, markets would skyrocket. Every time they would lower rates, every time they would tease the lowering of rates, markets would skyrocket. In the last 2 months, you had Europe, you had Japan, you had China all talk about and do lower rates, more printing of money, and stock markets have crumbled because of it. So I think just the game is up, and I think we're in a different scenario right now. And I think central bankers have to be very careful about what they say right now.
So, Gary, why are stocks selling off then? This morning we're looking at up arrows, but in general, why the steep sell-off this year? The worst start to any year ever. Well,
I've told you for a few months now, I think the markets have flushed out, that economic growth around the globe is heading south, and in some areas of the globe are in recession already. And I don't think you get oil prices crashing and transports also without there being trouble around the horizon. So you already saw a 6/10 number for GDP here. I suspect in the next couple of quarters you're going to see some negative numbers, and whether it gets really bad or not, I'm not sure just yet.
What are you going to watch for to really know when it gets really bad? I mean, first of all, transports and oil. Transports are also the economic indicator, right? Are they moving stuff, the truckers, the shippers, the airlines? Are they actually moving merchandise that has been manufactured and the like? So it's not only an oil play, but also just an economic indicator.
Well, just a few things that I see right now. Shipping rates that are an all-time low. We'll start with that. And if you just look at a lot of economic numbers that have been coming out right now, we're starting to see a bunch of negatives or flatlining everywhere. And again, another big problem I think that we have is that over the last 7-8 years, under the cover of all this printing of money and 0% rates, debt has skyrocketed. We have gone from 12 to 19 trillion in debt, and I think that's also hurting economic growth and the potential of the economy going forward also. So I think we're in this area where there's a lot of bad things underneath the surface, and guess what's happening? They're starting to bubble up now.
All right, Gary Kaltbaum, president of Kaltbaum Capital Management, thank you very much.